Dear students, this week we are getting into financial analysis, module number 13. So for this entire module, we'll be learning financial analysis depreciation calculations using Excel, present value and future value analysis, net present value and internal rate of return IRR analysis. And finally, all these basics that we'll be learning will be applied in the financial what if analysis and the most important financial statement presentation using pivot table. So that's the plan for this week as well as the week after coming back from Thanksgiving. Yeah. So as a part of this whole module, these are the three assignments that will be due next week. For now, I kept it until next Sunday. Yeah, probably I will be happy to move it until like next Tuesday. Yeah, like adding a couple more days. But yeah, that's the plan. And after that, we'll be having our Thanksgiving break. Yeah, followed by we'll meet up again on this November 27th. So that's when we'll be learning about the financial what if analysis and the final statement preparation using pivot tables. So that's what we'll be learning in the last week of November. And after coming back, yeah, in the last couple of weeks of December, we'll be moving forward with our module 14 and module 15. So module 14 is AI and emerging technologies. Yeah, it's a part of the fourth industrial revolution. So I'll be teaching those topics to you. And the next part of it is skills needed with respect to SMB, yeah, data analytics parts. So that's the last module we'll be learning. So that's overall plan for the remaining semester. Hello students, continuing with our lecture. So as I said, we'll be solving this depreciation calculation using Excel exercise in this assignment in this lecture. And again, the reason why we are doing this entire financial analysis is to help you guys understand the most basics of a financial statement using pivot table. So we'll be doing these step-by-step exercises to get to this point. And the end goal is for you guys to actually utilize the Excel to easily do it. So it doesn't matter how complex the data is, you should be able to utilize Excel using some hands-on exercises. And finally, I'll be providing a small description so that you can post on your resume about assignment solved as a part of this class. So that should help you guys in either getting some good internships in next summer semester or the summer after. Or if you guys are already about to graduate, this should help you. The key skills should help you in adding to your skill set on top of the degrees that you will be getting. So eventually all these small things add up to your skills, which will help you in landing a very good job. Yeah, so that's the goal. With that said, getting started, depreciation calculations using Excel. So here we are going to learn about how we can calculate depreciation using Microsoft Excel formulas. But before we begin, understand that for some of you, this term depreciation concept may not be, so you guys might not be familiar with it. So that's the reason. Let me give you a bit of revision or a synopsis of what this is. So in simple words, depreciation is allocation of cost of an asset over its useful life, but it is in a systematic manner. So what does that mean? Is let us say you have purchased an asset which will have a life of 5 years, and this asset can be any machinery that your company has purchased, or it could be any software that will have a working life, or it could be as simple as your computer. So every asset has some working life, active life. So in industry terms, this is a term you will be coming in contact, or you'll be hearing this term again and again in financial world. So for now, just take my word. So it is an allocation of cost of an asset over its useful life in a systematic manner. Yeah. So yeah, coming back, let us say you have purchased an asset which will have a life of 5 years. I mean, this asset will be used from year 1 to year number 5. But of course, you purchase that at the beginning of your year 1. So let's go to this slide over here. So you purchase it at the beginning of year 1. Yeah, so by this time you must have paid for this asset entire amount, at the beginning of this year one, but this asset will be used over the next 5 years, and at the end of which it will be disposed or disposition. Now the concept of depreciation is that the cost of asset will not be charged into the year one. Rather, it will be split and divided over the next 5 years. So allocation of the cost of an asset over its useful life, we will be dividing we will be dividing the total cost over the life of the asset. So entire life of the asset for 5 years. So let me give you an example over here. So let us say you have purchased an asset that is worth $1.2 million at the beginning of year one here at the beginning. And then at the end of 5 years, we estimate that we will be able to sell its asset for 0.2 million from, so you can see from 1.2 million, it has gone to 0.2 million, 0.2 million, which means that the value of the asset will fall by 1 million, 1.2 minus 0.2 million. So it will be falling by 1 million. Now, what we have got to do is we have got to distribute this 1 million over this 5 years, entire 5 year time span, and that is called depreciation. Yeah. Now, the next very important question is how we can distribute the 1 million over 5 years. Should we, so we should equally allocate this over the 5 years, or shall we use some kind of different basis to calculate, or use some kind of formulas to reduce it or depreciate over the next 5 years. So here comes the concept of methods of depreciation. So there are multiple methods, but the most famous, most popular ones of these are either straight line straight line method, or declining balance method, also called as reduced balance method, or sum of years digit method. Now, accounting allows you to choose any of these methods or even some other methods if you can justify those, or some companies have their own ways to calculate them. So utilize it. So, but for the scope of this class, we'll solve some problems using these popular ones. So I will just stick to these three ones for now. So now these are the most popular methods, and for each of them, Excel has dedicated formulae, which means that we do not have to do all those detailed workings, addition, subtraction, and separate formulae that are usually required in accounting and financial world. But we will be able to solve depreciation with these three different methods in Excel. We can simply write a linear formula and get our answer. Now, before we begin, let us revise the three important terms and that we should know. The first one is cost, which is all the expenses incurred to bring the assets to present useful condition, which means that if you are purchasing the machinery, all the expenses incurred till the point the machinery is installed and ready to, for the manufacturing or utilizing, all of those expenses will be the part of the cost. So that's your cost, all the expenses incurred. So it is it is sum of purchase price, import duties, installation, registration, and everything until it gets to the point where it could be manufactured. And then we have the second concept, which is the useful life, which simply means that the number of years for which you intend to use the asset. And the third one is the residual value, which is basically the expected sale value of the asset after the useful life. So definitely useful life and the residual value. So the last two terms are the estimates that are made at the beginning of the asset. At the beginning of the asset. So now we are ready to start working with depreciation formula using Microsoft Excel. Let us start with the first method of depreciation, that is straight line method. In this method, we calculate the depreciation charge per annum using the formula that is cost minus residual value divided by useful life of asset. So if I just take an example here, if we say that we purchase a machine for 1.2 million, we intend to use the machine for 5 years, And after that, we expect that this machine will be sold for $200,000. So 1.2 million to $200,000, which means that in 5 years, this machine will be depreciated by $1 million. Now, in a straight line method, we will be using these values, and let us put the values in the formula. So as we populate the formula with these values, our answer is $200,000. So yeah, here is the formula: cost minus residual value divided by useful life. 1.2 million minus $200,000 divided by 5. So that gives yeah, $200,000 is your answer. And this is going to be yeah, you know, the depreciation charge in each year from year 1 to 5. But now we suppose we work in Excel rather than working this way manually, solving the problem. So for doing that, I will request you all to go over Canvas section. Tell people there. Yeah, please click on this assignment S17 financial analysis depreciation calculation using Excel. And here there is a link I have provided to download the Excel. So please download that and open it. So here we need to do the calculation of depreciation with the straight line method. So yeah, by using a formula that's equal to cost minus salvage value divided by life. So let me calculate the value in here. Yeah, so as stated, yeah, systematically presented cost 1.2 million, salvage value after the end of the life is 200,000, and life is 5 years, and the method we are using is straight line. So let's calculate the first one for year 1. So the very first is plus equal to sign, and now the formula is yeah, highlighted over here. Now let's type in SLN and press tab. Yeah, a bracket starts. And now, yeah, as per this formula shown over here, that is syntax that is equal to SLN. First, you have to enter the cost value, then salvage value, then life. So again, you can always enter this 1200000, but that is not preferred. Always and always make sure you select the cell. So I'll go ahead and do that. So selecting this cell, pressing comma, then the salvage value, which is the second salvage. Select that cell, then the next, that is life. I'm selecting the cell, and then I'll press tab or close the bracket again. And once I press tab, I get the value, which is 200,000. That's exactly what we calculated using our Excel formula over here for each 5 year. Now we have to do the same thing for year 2, 3, 4, 5, and yeah, that's it. But before doing that, we need to yeah, like lock in the values using the dollar sign. So in order for me to do that, I will press, yeah, I'm using a Windows based computer. So I'll press function F2. So that will highlight the enter formula and the syntax. So here for each of the cell, I'll just go and select anywhere in the cell. So let me select middle over here, and now I'll press function F4. So that will add the dollar sign. So that will lock in those values. So it will, yeah, absolute lock in those values. Same thing I'll do for the next cell as well. I'll select or yeah, click anywhere over here. Then I'll select function F4. It will do the same, and third one as well. Somewhere in the third cell, function F4. So now you can see the dollar signs have been added for all the 3 cells. Now I'm pressing enter. Now I will go ahead and copy paste this formula for the remaining 4 years as well. And you can see I'm getting the right answers. So in this case, for straight line method, the depreciation charge should be equal for each year, which is here using the formula for Excel. and you can do it quickly. You don't have to do it manually like the formula shown in our PowerPoint presentation over here. So with this, we select the very first, we complete the very first, that is depreciation using straight line method. Now let us move forward with our second method of depreciation, that is reducing balance method. And this is also called as declining balance method. In this method, what we do is we calculate the depreciation charge for a year by taking the net book value and multiplying that with the depreciation percentage. Now, first of all, this net book value is calculated as a cost minus the previous depreciation charge for that asset, which means that this value is going to change for the asset for every single year. So as we saw in the previous problem, if we decide to use this, it will be different for year 1, year 2, year 3, and the last year 5. And then we also need to know the depreciation percentage. Let us take the example of the same like a previous problem that we solved for method number 1. So here we are using the same where the purchase value of machine is 1.2 million. We expect to use that for 5 years, and after which the expected sale value is going to be $200,000. Now, in the declining balance method, we will calculate the depreciation charge for each year. Using this method, we should have the net book value and then the depreciation percentage. Now, if you are working manually, I mean, without using Excel, first of all, you will need to work out the depreciation rate, and then you need to calculate the depreciation for each year and update the net book value so that you can calculate the depreciation for next year. This is a little lengthy process if you're done manually, but in Excel, this is going to be very straightforward. So let us take a look. So I'm opening the Excel file that we had downloaded previously. All I will request you guys is for you the selection, the selected 5 cells for you. You won't be able to see anything because it is highlighted in white color. Well, there was a reason I did it. But now, I request you guys to select all these 5 cells and use this automatic or black color so that the numbers will be highlighted. Anyways, coming back to our problem. So let's use Excel. So just like what we saw before, this is the cost, that is 1.2 million the value, and the salvage value is 200,000, and the life is the same 5 years over here. And we are supposed to use this formula over here to calculate the depreciation charge for each year using the declining balance method. So this is the syntax, this is the formula we'll be using. So it equals to, so in this formula, what you have is, you have to start with equals to DB, then bracket start. You have to add the cost. So which will be this cell over here, salvage amount, that is this value over here, cell, life, which is 5, and period we'll be entering, as well as the month. We'll be talking about, I'll be showing you how this is very simple. So this is the syntax of the formula we'll be using. So let's get started. So the very first, I want you guys to start with equals to and press tab. Oh, sorry, equals to and start DB and tab. It will start a formula. Now let's link the first, which is cost, comma, salvage, comma, life, comma. Now this is the tricky part. For the month, I'm just going to select the number over here, that is 1. And for the month, since we are going to use this whole depreciation for the entire year, we are not going to need the month over here. So I'm simply going to close this bracket over here and going to press enter. So this is the value I got. Now, in order for me to calculate for the remaining 4 years, let me open this formula over here, and then I'll press Fn function F4 here again, because I need to log these cells. So Fn F4 for second one, Fn F4 for third one, Fn F4, and the last part, which is B9 in this case, that is this period. I will be using this period 2, 3, 4, and 5. So I won't be locking the last part. So technically, for locking the cells, I'm done. So I'll simply press enter. So this is the number I got. Now I will move forward with, say, Control C. I'll be copying this formula. So I say Control C, and I'll be selecting all these cells and saying Control V over here. And now you have the depreciation charges for each year 2, 3, 4, and 5. And you can see this charge is different each time. So you can see that you have calculated your depreciation very easily in comparison of doing manually by using Excel. This would have been a very lengthy process if you had to do manually for doing calculator, pen, and a paper. But Excel has this standard syntax in it, so that solves it very straightforward. So this completes our second method, that is depreciation with declining balance method, or DB. Let us learn about our third method of depreciation, that is double declining balance method. So this method is very similar to the previous one, that is declining balance method. And in fact, we use the same formula to calculate the depreciation in this method as well. The only catch here is that the depreciation rate is doubled. Now, there is a little accounting technical description that perhaps is not very relevant to us for us to learn at the moment now. But I would just share that with you for the sake of completion of this assignment. So the way it works is that we first calculate the rate of depreciation using the straight line method, and then we double that rate and use that rate over here. I repeat, we first calculate this rate, the very first one, using the straight line method, and then we double that rate, use that rate over here. So this is a little technical background, but this is not relevant to us since we are using Excel formula straight away. We can ignore the technicalities and directly get our answers. So now let's move forward with our Excel template. So here is Excel. You can see I have the same data as before, and I'm supposed to use this DDB syntax in Excel. Yeah, so again, the right syntax is equal to sign DDB bracket start cost. In this case, we'll be using this cell B5, followed by salvage 200,000, followed by life 5, followed by period. In this case, this is the number we'll be using. And the factor in this case, you can use again, this is a case of declining method, and again we are talking about double declining balance. So the factor in our case we'll be using is 2 because it says double declining. You can have triple declining or 4 times declining as well. In that case, the factor you have to enter is 3 for triple declining and 4 for 4 times declining balance. Yeah, so in our case we'll be using a factor of 2. With that said, let's get started over here. So I'm starting with equal to, starting with DDB tab. So it initiates the formula, or you can just start with a bracket and then cost first. So the very first here, cost, comma, salvage here, comma, life here, comma, period I'm looking for is the first one over here. And then as we discussed, I'll be using a factor of 2 because we are going with the double declining method. And I will close and I'll click enter. And this is the value I got for as per the double declining balance method. The first year depreciation will be 480,000. And before I copy paste this entire formula for year 2, 3, 4, and 5, I will lock in some of the cells. Yeah. So the relevant ones. So the very first B5, I'm selecting FN, F4, second one B6, FN, F4, third one B7, FN, F4, and pretty much that's it. So yeah, I got the same answer, but again, I'll double check. Yes, I have locked in 1, 2, 3. That's what I wanted. Now I will do a Control C and I'll paste these values over here. And this completes, yeah, for each year, yeah, the depreciation charge for year 1 to 5. Yeah. With this said, we can now close this part. But in case you are interested in understanding this double declining thing again, let me explain you a bit more. And this is more of a theoretical part. Like I said, we don't need to understand these accounting technicalities, but yeah, just it will take me like 30 seconds or a minute or so. So 5 years of the life mean that you have to split your 100%. So this is your 100%. Yeah, of cost minus the salvage, which gives you 1 million. So you have to split that 1 million using straight line method. So it will be 200,000 per year divided by 5. So yeah, so for 5 years it will be 100%. So that's 20% should be in 1 year. Next 20% in year 2, 20 in year 3, 20 in year 4, and the remaining 20 in year 5. So I'll write down over here. So as per this straight line method, it's 20%. And since I'm using a double declining, I have to double that. Yeah. So 20 multiplied by 2. Yeah. So this, oh, sorry, I'll use a formula equals to 20% multiplied by 2. That is doubled value is 40%. And I have to multiply this 40% with my entire cost that I pay initially. So equals to this 40% multiplied by 1.2 million. I'll press enter, and that's the value I got over here, 480,000, which is same as this value. So this is as per the technical formulas, accounting formulas, but we are not doing it like yeah manually or you're separately using Excel. Excel has a straightforward formula for DDB, and this is the syntax you have to use. And since you are using double declining, I'll be using a factor of 3. And if I had to use say triple declining, this will be 3. And by that logic, I should be getting 720. Yeah, if I have to test that, I'll just go over here and I'll change it from 2 to 3 and let's see the number. Yeah, I'm getting 720. Yeah, so this is exactly what I'm getting. But I'll see Control Z. Yeah, let's stick with the basic. But this is how we get with respect to accounting if you use that accounting methodology. So this completes our third method, that is yeah, depreciation with declining balance, and specifically double declining balance. Now let us learn about our fourth method of depreciation, that is sum of years digit method. Now in this method, what we are supposed to do is we are supposed to calculate the remaining life in years and make that as a base of our depreciation. What this means is, so actually we are supposed to follow these 4 steps to calculate the depreciation. That looks like something like this. But since we are using Microsoft Excel and Excel already has those inbuilt formulas, we are not going to get into all these level of details, complications, and possibility of lengthy procedures and mistakes and so on. So simply we will be using our Excel calculation to do it. So here we are in our Excel part. We have the same scenario, the cost value, salvage value, life, and depreciation method stated over here. So we are supposed to use this formula, that is yeah, that is yeah, SYD bracket cost, salvage, life, and period stated over here. So let's get started. I'm going to start with an equal to sign, SYD tab, cost, comma, salvage, comma, life, comma, period, bracket, close, and press enter. So it gives me the depreciation charge for year one. And just like what we have been doing previously, I'm highlighting the formula, opening the formula, and locking the cells which I need to be locked down. So selecting the first one, function F4, selecting the second one, function F4, selecting the third one, function F4, and pressing enter. And once that's done, I will verify, yes, everything looks correct. I have locked in the necessary cells. I'm going to say Control C, select from year 2 to 5 and Control V. And here I got the depreciation charges for the remaining year as well. So I hope compared to our method 1, 2, 3, 4, and very similar to method number 1, which was a single, like a straightforward straight line method. Even this formula or this fourth method is also very simple. Hello students, now adding one more method of depreciation. So let's call it as a bonus method. This last method of depreciation in Excel, which is known as variable declining method. And this is nothing but an elaborated version or different way of utilizing our double declining balance method that we already used. So in fact, this is no different. It's just a different way, a different formula of Excel for the double decline balance method. We are calling it as a variable declining because here we will have an option to choose if you want to double or triple or quadruple the right. You can choose that as a factor over here. So instead of using like 2 in case of double declining, you can use 3 and 4 as well for triple or quadruple. Higher, it will be like too aggressive declining. Maybe all this depreciation will be paid off in single year. That would be too aggressive. So usually companies won't go more than 3 and 4. But again, each company is different. Each asset is different. So follow, whichever is appropriate. But yeah, this is just a method as per accounting theory, accounting financial theory. So I'm just I'm just bringing up with you guys. So we are already aware of this problem. We have solved previously also like 4 different methods. But here, this is the syntax of this variable declining method. It starts with equal to VDB. Bracket start, you enter the cost, you enter the salvage value, you enter the life. Now, here is a catch. There is something called as start period. There is something called as end period, and there is something called as factor. And finally, there is this optional switch or no switch. So yeah, the first 3 are straightforward. In terms of start period, yeah, so suppose my start period is 1, or yeah, maybe at the very start, which will be 1 minus 1, which is 0th start period. And if I put my end period for the entire 5, I'll put 5. Or if I'm just looking for 1 the first year, I'll be putting this end period as 1. And the factor of 2, 3, or 4. And yeah, the final one is optional. So I'll just ignore that. And yeah, I'll click enter. And I should be getting the final answer based on what factor I decided. Yeah. So again, I will repeat myself. This method is no different than our DDB that we had seen. But again, it's a different way of using the same function. But just thought that I should be showing you this additional function because Excel has beautifully created these extra versions, and depending on what theory you are following or what is the rate you are following, you can use either formula. Very simple. DDB function itself, that is DDB and necessary selections versus VDB and the necessary selections. Yeah. So again, getting started over here. So I'll start with equals to VDB tab. It will start a formula. I will enter the first, that is cost, comma, salvage, comma, life, comma. Now you see at start period, what I'm doing is, in my case, I am just looking for this very first year. Yeah. So I'm selecting this cell, first cell. minus 1. Yeah, so my end of the the start period will be 0. So which will be this number, which is 1 minus 1. So it will be at the beginning of the very first year when it starts. So that will be my start, and my end period will be the actual B9. So I'm looking for 1 year only, followed by, suppose I take the factor as 2. So I'm looking for double digit decline. So let me put that. And like I said, the last one, switch or no switch, is optional. And again, that is considered for other theories. So for now, we'll just ignore it. So I'm just closing the bracket and pressing enter. And again, I got a number. Yeah, so this is my first year depreciation chart for year 1. And just like what we've been doing, I will open the formula. I will lock in F4, second one, function F4, third one, function F4, and that's it. So once that's done, I will double check everything is done correctly. 1, 2, 3 done correctly. I have locked in those cells. Now I will copy the same thing and paste it for the next remaining 4 years. And technically, the factor I'm considering is 2 over here. So that is nothing different that we had done in the DDB. So technically, these numbers that we have got should match up with the numbers we got in our DDB formula. So let's go and check. 480,000, 288, 172, 8, 52, sorry, 59, 2. And yeah, same numbers, 480,000, 288, 172, 800, 59, 200. So exactly the same numbers we got. And just to elaborate, we have this, in this case, we have the luxury of a factor, which we entered 2 over here. So if I do change that, yeah, suppose instead of 2, I'm using triple digit decline. So let me use the number 3. And this is the number I'm getting. And I'll copy paste the formula for the remaining cells as well. Control V. So with that said, yeah, you can see if I use a triple digit decline, I'll be paying out those 1 million depreciation in couple year only, because I'm being very aggressive. Yeah, same thing if I do for the year like we have quadruple the declining rate. So if I use 4 and say Control C and Control V for the remaining cells. So you see, in the very first year itself, it will depreciate by 60,000, and only 40,000 will be remaining, which I'll be paying off. So yeah, like as soon as you increase these factors, your rate of depreciation declines like significantly. Most of your amount is paid off in the initial years because you are being very aggressive. Yeah. And again, I will repeat myself, this is an accounting thing. We don't have to know the technicalities as of now, but these are some good to know information formulas. So just bringing it to your attention. Yeah. So like we said, I'm going to say Control Z, Z, Control Z, Control Z, Control Z, Control Z. Oops, went too far. Control Y, Control Y. Perfect. Yeah. So this is my double digit because my factor is 2. And again, the same thing applies other places also. So this completes our fifth, that is our bonus method of depreciation.